Good morning. In this presentation we are going to see how we can trade in MCX Gold for this week. Before looking into that, let us see what happened last week and what we expected last week. And also the chart you are viewing is an 1 hour chart, since you always know that every week Monday is going to be a weekly presentation. So every single candlestick represents 1 hour. As two double dotted vertical lines indicates the price opening and closing for the respective days. Whenever we are placing cursor on a particular candlestick, you can always see the date below. So what happened on Monday is that on Monday the price opened, the gold market opened around 29,600. So this is the zone where the market opened on Monday, and as you all know that we were targeting this 29,520 and 29,500 as a base zone for deciding the trend in gold market. So on the previous week we used this zone, and you can see the level of buying we had after the market testing the zone. So the market gave a clear uptrend direction, upward direction after testing the zone. Last week also we were targeting this zone initially. So on Monday after the price opening, the importance of this zone is that unless until we see a clear price action below and closing below this zone, we expected gold to continue its buying. If we see something below that, we are going to reverse our view. That was our clear strategy at the beginning of last week. So after the market opening around 29,600, the market just came down and tested the zone and went up and closed a bit higher. So on Monday the market just closed around 29,660. So the market was staying in line with the trend and in line with our expectation on Monday, because we expected the market to continue its buying, having 29,520 and 29,500 as a good support. On Tuesday the market just opened lower, just below this below the previous day's price closing, and immediately it came down and tested this zone, and it had a real buying. You can see the amount of momentum it had. After testing the zone, the market went up till 29,640, but a failure to sustain above the zone pushed the market down, and you can see that it was a clear breakdown that happened on Tuesday, that the price broke the zone, and you can see the market came down and closed lower, which indicates us that the trend has reversed. So many times we used to say that it is not just like that the market will crash. So people, a lot of perception about trading is that suddenly the market will come down. We expected the trend to be higher, but you can see how much time it had. It came down, tested this once and again twice, because every candlestick represents 1 hour. Even within this zone you can see there are 3 candlesticks, which means that 3 hours it has provided us 3 hours to decide and change and reverse our view. So this is always the market. There is always an opportunity, there is always a way, just we need to think in the right direction. So after the breakdown and closing below that, it is a clear confirmation the market is going to move down. There is no point in having a buying below the zone. That is what we are trying to do. Place a stop loss, that will help you reverse it if you are clear with your views and ideas. So the next day the market opened lower and stayed lower, and it came down till 29,220, and from there we reversed our view. We have how we reversed our view. We had this 29,400 and 29,420 as a resistance zone, and we try to go for a selling. On you can see on the next day also, that is on Thursday also, the market stayed in line with the selling, so the trend was clearly down. And Friday we made just a little bit of adjustment, and we thought the market will go for selling in order to protect our profit. We thought till 29,360 we can go for a selling, and exactly after testing the zone the market dropped down and closed lower. So what can we do for this week? There is no doubt that the trend in gold is still down, because unless until the price stays below 29,360 we cannot expect the market to move higher. So this is going to be a key zone, 29,360. That is the reason we picked this zone on Friday, in order to protect our profit also. So the expected price opening is going to be more or less around the same zone for gold market, and it can be subjected to changes. since we are presenting this video well before the currency and the MCX commodity market opening. Based upon the rupee factor, it can be subjected to changes, and we expected the price to open just in and around the zone, and initially we are going to target the selling trend, because we always trade with the trend. Unless until we get a clear confirmation, we don't trade against the trend. So since the expected price opening is going to be below 29,360, this is going to be the major zone which we can target for this week. Only if the price move above this zone, and after seeing a clear price action above this zone, we can go for a buying. So that is going to be the first strategy. The first strategy is going to be go for a selling, having this 29,360 as a resistance level, and the target zones, you may know that 29,160 and even 29,000 can be expected if the trend continues to be down. But if you see anything above this 29,360, it can, and a closing above this, it can possibly provide a good opportunity for buying also. So our view and strategy for gold is very simple. First, initially we are going to be staying in line with the trend, and after seeing the price action around 29,360, we will decide the market can show some positive reversal above this. It is always based around 9 o'clock the rupee market will open, the currency market will open, just see where the rupee is staying. So as far as our analysis is concerned, initially we can go for a selling, and then we can reverse our view about buying in gold market. So let us see what's going to happen during our trading session, and thanks a lot for watching our video, and happy trading. Take care. Bye.